Welcome back, investors, to Ticker Time News. I'm Adam, and FedEx released its Q2 earnings after hours with EPS of $3.18, and that beat by 36 cents per share, and did it on revenue of $22.8 billion. Now, the revenue part here, they were actually down 3% year over year on that $22.8 billion in revenue. And they missed expectations by $920 million, nearly $1 billion missed on its revenue side. Now, FedEx Express operating income actually declined 64% year over year due to lower global volumes. And that was partially offset by an 8% package yield increase. Now, FedEx is in a unique situation, right? In the transportation industry. They know how the economy is going by how many packages they are shipping, right? During the pandemic, FedEx just took off to the moon, right? Because people were at home ordering like crazy from online sites. Amazon is a particular one that I'm sure you know of that shot up with all of the online orders. Well, FedEx had to deliver those orders. Now that the pandemic, oh my goodness, is behind us, now packaging, shipping is slowing down. And the economy is slowing down. People are ordering less things online. This is why FedEx has dropped. And it dropped again today during regular session hours, but in the after hours, not as much. Now, the previous announced accelerated share repurchase program, it was initiated during this quarter, and 7.9 million shares were delivered under that agreement. Now, FedEx is prioritizing actions to quickly reduce costs in order to align fiscal 23 costs with weaker than expected volume, because 2023, there is a recession coming in 2023, and it's not good for the transportation sector. However, FedEx is an important company to watch because as shipping volumes start to increase, once we get past the recession, that will be a key leading indicator that our economy is coming back from the recession. Okay? All right, now, FedEx also identified an incremental $1 billion in cost savings beyond its September forecast. And remember when the stock dropped last quarter, big time, and it dropped not as much, but it dropped significantly before their earnings because they pre-announced some things. Yeah, well, some of that ground was made up since their last earnings over the past 3 months, but it has been moving sideways. That yellow highlighted box, this is the daily view on the FedEx chart. You see the big drop down, you see the big dip there because of earnings and their forecast for 2023. And then over the past month or so, month and a half, they've just been trading sideways in a chop box like they were prior from earnings until about a month and a half ago when they actually jumped up just a little bit. Now, I want to talk about that $1 billion in cost savings that FedEx found. It is going to now generate a total fiscal 23 cost savings of about $3.7 billion relative to its initial fiscal 23 business plan. Now, FedEx is up 3.4% in the after hours, just slightly below, about a nickel below the 170 a share. That's where it's sitting right now. That'll show up on the charts tomorrow at the open, as long as that's not wiped away. So I do expect FedEx to tick up a bit tomorrow, especially because of these earnings. And it's like a lot of the bad news has already been discounted in the stock for FedEx, and finding that extra $1 billion in cost savings, that'll go a little ways in the stock price. Yeah, just wanted to mention that little last tidbit there. Now, there's not much to talk about on FedEx stock You saw the drop from last quarter, big dip down, big drop down. But recently, the past month and a half, we had a little kick up here, and it's just moving sideways. Tomorrow, when the market opens, it will open right back up inside of this chop box. I don't think FedEx is going above 185. I think that's the cap for FedEx right now. So if you want to pick up a swing trade, FedEx may provide that to you. Not financial advice, but it is something curious that a setup could be there. If I go to the 5-minute chart for FedEx, just real quick, just to show you today and how it went, it was pretty flat, slightly to the downside. And then this afternoon, investors just got scared that maybe a lot of bad news was coming. So it dropped. It discounted it even more. So with that pop, FedEx now, with the after hours being up here around 170, it's going to open up here. There's going to be a huge gap up in the morning on the 5-minute chart due to where it's positioned right now. How that carries the rest of the day is to be seen. Okay, let's go to the markets now off of FedEx. Let's see. I see your comments there. I'm going to be diving, so can you go over? Oh, driving. Got you. Driving. I'm going to be driving, so can you go over Tesla? I did watch part of that NVIDIA. Let me pop it up here so everyone else knows what we're talking about. I did watch part of that NVIDIA video. That is interesting. Unfortunately, I didn't have enough time to watch the entire 20-some minutes of that video. But I'll watch the rest of it this evening. I really don't have much to say about that video. The guy could be correct. I've heard his stuff before, but I haven't had time to listen to it thoroughly all the way through, or kind of digest that and do a little research to kind of see, well, is this factual? Is this just an opinion? How that all works out. So give me a day. I can talk about NVIDIA tomorrow. As a matter of fact, I'll go ahead and write that down. I don't want to talk about something that I really don't understand quite yet. And since I didn't watch the entire, what was it, 24, 25-minute video, you have to give me a moment to get back on that. So NVDA, and we'll talk about that during tomorrow's live stream. So I can pick that video apart and then do some research to see how it works. And then thoughts on housing market. Yep, housing market is on my notes here to talk about today. So absolutely we'll do that. And Tesla. I actually have a note to talk about Tesla today too. They fell again sharply. And I'll go over that. So while we're doing so, let's do it. Today, let me go to the 5-minute chart, and I'm going to go to the SPX. Something interesting popped up on the charts today that I was following. As you guys know, I do have a long position opened on TQQQ. And I've had it opened for 3 days now, I believe it is. But look at this. We had this triangle wedging pattern. How we want to define it? We can technically define it this way. I'm going to go to the chart patterns here, and it's got a, let me just double check something. We have first, let me give you the 3 characteristics. We ran up, okay? We have a flat top, and we have an ascending bottom, okay? Bottom is going up. So when we look at the chart, oops, wrong button. No, wrong button, disappear. Okay, there we go. Okay, so when we look at the chart down here, let me take those goofy drawings off. Bottom right, this is it's called a bilateral pattern, and it's an ascending triangle, okay? These can break either way. They can go up or they can go down. Characteristics. going up, rallying into it. We have a flat top and we have an ascending bottom. This can break to the upside. This pattern can also break to the downside. Interesting, huh? So this rally that we saw today could easily be a fake out and easily turn around tomorrow and head down. And as a matter of fact, looking at this pattern, look what happened. We started it this morning. We held as support mid-morning. And then this afternoon, let's see, right here at about 2:30 Eastern this afternoon, it acted as support, but then it broke that support line, dipped down, then found resistance before briefly popping up and then breaking back down at the close. To me, there was a lot of selling into strength. We heard that a lot at the beginning of the year today, at the beginning of the year, selling into strength, all right? Whenever we would have a rally, boom, the rally was cut off, and then the market came back down. Those characteristics were in the market today. So shortly after the opening bell rang, today's trade had a very similar look to what we've had over the past several days. Maybe today was going to be another downtrending day for the stock market, but that didn't happen. The main indices bounced off of their early lows. However, buyers did step in after the S&P 500 breached its 3,800 level. 3,800 level. Let's go down here. This candle this morning, right at 9:45 a.m. Eastern, okay? Right down here, it got down to 37.96. 37.96 is where it dropped to. And that is when buyers stepped in, and on the volume shelf profile, we can see a little candle sticking out a little bit more than the rest, all the way over here to the left-hand side of the screen. That volume shelf profile, it's sticking out, okay? It's sticking out a little bit more because the buyers jumped in at that moment, sending the market or the S&P 500, SPY, and SPX up higher. But it reached its cap for the day. And that resistance, it held this morning after it ran up, and it held this afternoon as resistance. Now, with this chart pattern, the ascending triangle, and with it being able to break either way, up or down, with it breaking down right into the close, the last hour of the day, maybe 45, no, not even hour. This is the 5-minute chart. So 5, 10, 15, the last 20 to 30 minutes of the day, the market broke through that support line and it fell. What is that going to do for tomorrow? Has this ascending triangle already played its part? And are we going to drop further? Very interesting, huh? Well, let me kind of counter that. I'm going to change this up, clean up the chart. Just a couple more little ticks to remove here. I'm going to go to the 15-minute chart because remember, we were in a falling wedge structure going into today. All right. Let me take, you hear the sirens in the background. Don't worry, that's not me. At least I don't think that's us. The door is closed in this room, so hopefully it's not us. It sounds like the neighborhood beside us, but if you can hear them. Okay, so look at this, right? We had this expansion move down, right, from, let's call this Wednesday, December 14th. An expansion move down, and then we started to contracting, forming this falling wedge. Well, a falling wedge is bullish. And of course, We also had the positive divergence with the RSI and the PMO. The RSI is the relative strength index. It is still rising. Let me pull it up here so you can see it a little better, okay? Look at this. Higher lows were being made. That is a positive divergence. Looking at the PMO, which is the price momentum oscillator, this is still running higher, making higher lows. So we still have a positive divergence building between the price action and these indicators, meaning price should go up. And it did. Today, the falling wedge, price broke out of that and moved higher. Okay. Then on today's price action, we set up a ascending triangle, which can break either way. Now, if we look at where RSI is telling us the relative strength index, it's at a 48.6. That's kind of right there, middle of the road. The PMO right now, we've got a negative 0.04. So there's not a lot of spread there. Okay, let's keep moving on with our story of the market and see what we can dissect here to figure out for tomorrow. Now, since we were in the context of a falling wedge pattern, okay, since we were in that context, and then today we get that symmetrical, I'm sorry, not symmetrical, the rising wedge that can break either way. And then the last 30 minutes of today, it breaks to the downside. Maybe that's trying to tell us that this is all the momentum the market has right now. Or another theory would be that out of the falling wedge, which is a bullish structure, we get the bullish breakout, but it didn't go that far. And then it breaks down into the close because we were doing what? Selling into strength. Now, let me open this chart up a little bit and let me point this out to you. Look at where the high of today was. I'm going to draw this trend line straight across, and look at this. Look at this. This is very interesting. When we draw the trend line straight across from today's highs, it kind of cuts a little bit lower from yesterday's midsection where it was really hanging out at about that 38.30 level. On the bottom side of that, maybe 38.25. But then we get over to Friday's low. Today's high nearly matches up with Friday's low. I find that incredibly interesting. And again, this is on the 15-minute time frame. Now, we've got this odd triangle-shaped drawing here on the chart. What does that mean? Absolutely nothing. Nothing at all. But what it's telling me is if I extend this trend line out to the right, for us to get a sustainable rally, we're going to have to move up above 38.40. That's going to be an important line. 38.40. Very important and critical. Look at this. If I attach an anchored VWAP, I'm going to attach it to this morning's open. Wow, man, symmetry, things lining up on the chart. And I'm also going to attach one over here to Monday's open. Okay, look at that. I don't draw these lines perfectly. And these anchored VWAPs, I don't draw them at all. So let me take these trend lines off so you can see this. It's incredible. On the 15-minute time frame, if we open up an anchored VWAP to yesterday's open and today's open, where do they meet? They meet right exactly on, boom, today's close. So are these anchored VWAPs now going to turn into resistance, or are they going to be support? Because if we look, yesterday they were resistance. The anchored VWAP price stayed under that the entire day. But today, that anchored VWAP, along with this morning's anchored VWAP, acted as support many times throughout today. And it is literally right there on that closing candle of today. So this could literally be support, or it could be resistance. Tomorrow's open will be telling, okay? Tomorrow's open will be telling. If we open lower and underneath both of those anchored VWAPs, then we'll probably see a sideways moving day. However, if we open above those anchored VWAPs, we could see an uptrending day. Now, with the ascending triangle that was formed with today's price action on the 15-minute chart, that little breakdown at the end could be a false breakdown, because we had a false breakdown, remember, with that chart pattern earlier in the afternoon. Maybe it is a bear trap set for the bears. Something to pay attention to tomorrow. So on your charts, make sure you are adding those anchored VWAPs to this morning's open candle and yesterday's open candle. And it will reveal where that price is. And it's really, really, really close. Really close to the 38.25 level, which was support on Friday. Support on Friday, 38.25 is where support was on Friday. So very fascinating that these are aligning in that fashion. All right, I'm going to leave those there. Let's talk a little bit more. I'm going to take it over to the daily chart here for the SPX. And while I adjust this chart, let me just say that the upside bias today was supported by speculative buying interest due to an oversold market on a short-term basis, right? At the lows this morning, the NASDAQ composite was down 9.7%. That's your QQQ. And the S&P 500, whether it be the SPX ticker or the SPY ticker, was down 7.5% from their highs just 1 week ago. So, when taking into account the scope of recent losses, today's gains barely registered on the positive side, but they were gains nonetheless. 0.1% for the S&P 500. The Qs right on the flat line. The IWM and the MDY, which are your small caps and mid caps, both up 0.5% today. That was pretty good. Now, most of the outsized price action today, it was seen in the bond and the treasury market, which I'm going to talk about in just one moment. But first, on the daily chart for the S&P 500, ticker SPX, let me open this up. And you can see, I mean, look at this. 1, 2, 3, 4, 5, a big 5-session drop from its peak. And now falling into that wedge, we finally break out of that today. Can this be a turnaround point, sending the market higher? I think in the short term, yes, it is. Okay. In the short term, I do believe so. The RSI actually broke down even further today. It's down to 34.3. Not that big of a drop, but still lower than yesterday, which is interesting. And then the PMO, that's lower than yesterday too, which is the price momentum oscillator. That's showing you whether price action is moving up or moving down. And right now, its trajectory is moving down. Okay, so that's that. Okay, let me show you real quick the 10 and the 2. Real quick, the 10-year is going, I'm sorry, the 2-year is going up first. Now, the 2-year, it is still in this falling wedge pattern, okay? I can extend the lines out just like this, support and resistance lines, and it's still right within there. It's barely been moving the past few days, but it is creeping up higher just a little bit. The 2-year Treasury note yield settled at 4.27% after hitting 4.3% overnight. That's exactly where it is right now. Hasn't budged. Now, let's go look at the 10-year real quick. Okay. The 10-year has been making moves. The 10-year note yield rose 10 basis points today to 3.68% after hitting 3.71 overnight. Right now, it is at 3.71, where it was last night in between the cash markets. Can the 10-year keep moving higher? Yes. Yes, it can. The 50-day moving average for the 10-year is sitting at 3.82, or we want to round it up, 3.83%. That's where resistance for the 10-year will step in. And I think once the 10-year hits that point, the 3.83%, I think that will provide the resistance to allow the QQQ, the NASDAQ, to finally put some gains on the books and catch up and get out of the hole that it's dug over the past several sessions. Very important. Also important is the dollar. Ticker DXY. The US dollar index fell 0.7% to 103.97 today. It is still holding above that 102.5 mark that I have as like the red line in the sand. If the dollar crosses that 102.5, watch out, it could be over for the dollar. But the dollar itself was in a bit of a falling wedge pattern. It had a false breakout. Today, it pulled itself right back in to that wedge. Now, a falling wedge is bullish, okay? But the dollar has its 3 main averages sitting right above the wedge. The closest being the 20-day moving average. It is currently sitting at 105. And today, the dollar closed at 103.9. So not too far off, but it did pull back into the wedge, allowing equities to finally breathe this afternoon and actually come up with a rally. Small one, but many of these indices did end up in the green. Now, these moves followed a surprise announcement from the Bank of Japan, BOJ, that it will allow the 10-year JGB, its yield, to move plus or minus 50 basis points from its 0% line. Can you believe that? Japan has been at the 0-point line. Now, this move to the plus or minus 50 basis points was an increase because the previous band was plus or minus 25 basis points as part of an effort to, quote, improve market functioning. Separately, the Bank of Japan, maintained its benchmark rate at, get this, negative 0.1%, right as expected. But could you imagine if our Fed funds rate was at a negative 0.1%? Holy moly. That would actually be a bad thing for inflation because it would just skyrocket at that point. But Japan's got some economic troubles of its own. But that was a shock to the market, and it showed up in the bond and treasury markets. Okay, market participants also had to digest some disappointing economic data. Let me pull up the SPY for this part of the conversation. The disappointing economic data, it was released this morning. And I think this is why the market ultimately, first thing in the morning, looked like it was going to be a down day. The focal point was an 11.2% month-over-month decline in November building permits, which is a leading indicator. So with the leading indicator in the housing market being down 11.2%, what's that say for the housing market? Not very much. Now, this drop takes it to a seasonally adjusted annual rate of 1.34 million. Excuse me. The expectation was all the way up to a 1.48 million permits, that is. So we didn't get it. The biggest part, single unit permits were flat to down in every single region across the country. For the housing market bubble to finally deflate or be popped, every single region in the country needs to come down. This can't be a region by region thing. This has got to be a national, everything is under pressure and coming down. So for those in the market for a home, this was a good sign, at least partially, because lower building permits means there's less homes being built. And we've got a too little housing problem in the US. But still, buyers were not scared away entirely today, and market breadth skewed somewhat to the positive side. I think it was like 11 to 10 margin. But anyways, the major 11 S&P 500 sectors, they did close in the green. Although only one, can you guess which sector was up the biggest? It was energy, ticker XLE. It was up 1.5%, and it ended the day being the only sector up more than 1%. Why? Because energy sector drew some added support from rising oil prices. The rising oil prices have been on the march. They have been going up and up. They were up 0.7% today, $76.02 a barrel. Meanwhile, the consumer discretionary sector, ticker XLY, lost 1.1%. Why? I'll tell you in just one moment. Let's look at the SPY here. I just want to point out a couple of things on the chart. Number one, we've got the exact same setup right here on the SPY as we did with the ticker SPX. We have this expansion move down, which leads to contraction. We're contracting right now. We are contracting underneath. Let me show you right here. This line right here, this is the anchored VWAP for the low of 2022, which was October the 13th. We are underneath that still on the daily, building out a falling wedge, okay? If I go to the 15-minute chart, you'll see this a little more clear. I thought I clicked on it. There we go. All right, give me just a moment to adjust this chart. to make it a little easier to see here. And Tesla's coming up in just a moment. I think you've already made that connection to consumer discretionary falling today. All right, so if we look right here, 15-minute chart, we've got yesterday and today on the chart, right? We had our falling wedge pattern. What did we do from the falling wedge pattern? Well, we broke out, we came back, we back tested, we found support, and then we rallied on. This is a bullish sign to me for the SPY in the short term, okay? I'm not talking about over the next 6 months or something. I'm talking over the next few days. This is a bullish sign. Now, I know we sold off during the last half hour or so of the day. I get that. But when we sold off at the end of the day, we did not get to the low of the day. We held up right here. Actually, let me clean this chart up just a little bit. I love that we broke out of the falling wedge. We back tested. We found support on that falling wedge, and we rallied. But if you look at the close, 380, right? Look through here. And then also 380 right through here. There is support at 380 a share on the SPY. That's bullish. We broke out of the falling wedge, which was a bullish chart pattern. We back tested that. We found support on the falling wedge, and then we rallied off of it. I believe this is a bullish sign. 380 is support for the SPY. And I believe that we should move higher from this 380 a share position. Okay? That's my thoughts. You may come up with your own conclusion and think that, well, maybe the back test down here at about, let's call it 379, not far off from 380. Maybe that's the support area, right? Or maybe you want to take it all the way down to 378, which was the low right here yesterday. Either or, take it how you want it. We have a $3 difference at the most. 380 down to 378. That is a zone of support. If I put a trend line on yesterday's low and bring that up, watch what happens. A trend line right here on yesterday's absolute low. And when I bring this trend line up right here, look at that. We are making support, right? What do you need for a trend line to be validated? You need at least 3 touch points. And we got those 3 touch points on this trend line. It is moving up. I need to change the color to blue. This is support, okay? This is support. 3 touch points. First touch point, well, that's where it started. And then we have our second, third, and fourth touch point all right there, nearly in a row. 3 out of the 4 candles are the last 4 candles of the day. They are touching that trend line and bouncing off of it. So watch this trend line. Set it up on your chart from yesterday's low, and it lines up with the last 3 out of the 4 candles for today. Watch that trend line tomorrow. Does that trend line, does it get broken? Does price fall below it? Or does price continue to move up? I guess that's the big question. Then, what do we have to watch out for on the upside? Right around 382, okay? 382 is right here. That's where we got stopped today. 382 is right there. That's where we got stopped also today. And then if we continue over, we can go back a little bit further for that 380. And it really just kind of just, it cuts right through this chop area right there. But look right here. With the falling wedge and today's reaction, the price action, the price that stood out the most was 381. 381.1. So just out of that 380 zone, okay? So I think 380 with this evidence is support, but we do have to break that let's call it 382 to really start moving higher. And then I think we can run all the way up to 385 pretty easily at that point, okay? So on the SPY, 380 to 387, that's the support zone that we need to bounce off of to go higher. We need to break through 382 because that's prior resistance for today and for yesterday. And then we can go all the way up to yesterday's high at around 385. It is doable and possible. Okay, now that I've pointed that out, let's talk about why consumer discretionary was down 1.1% today and suffered the steepest loss by a huge margin. It was due to the ongoing weakness in TSLA is the ticker, and that is Tesla. Tesla was down 8.1% today. 8.1%. It continued to fall. I know you asked me on Discord and also during, was it on Discord? Now I don't remember if it was on Discord or not, but you asked me yesterday on the live stream, I believe. I think you did on Discord too, about Tesla. But we did talk about Tesla yesterday, and I put up this yellow box, okay? And in this yellow box, let me tighten this up. We are on the 15-minute chart. Let me go back to the daily real quick, just so we can see this yellow box a little clearer. We put this yellow box up yesterday, okay? And I need to take this and move it up a little bit. All right, so the purple lines, they are not updated weekly expected moves. Not yet. Today is Tuesday. I don't update them till Wednesday. I let our private investor community have those Sunday evening through Wednesday before I even talk about them publicly, except for the main indices, the SPX, the SPY, the Qs, the IWM. I do talk about those starting Monday on the live stream. All right, Tesla fell today right here inside the middle of our yellow box that we put up yesterday. The yellow box started at 150 and it drops down to 130. Why did I do this? Okay, if we look at Tesla and we go back in time to the last time stock split adjusted that Tesla was at this price point, here's where we have to go. Let me get the chart set up here so we can see it. Here's where we have to go. We have to go back here, okay? Let me get the highlighter. We have to go for this price point to November 2020. Now, Tesla, at this point in time, it shot straight up from about 190, 191. Well, it started at about, what would this be here? It started at about 144 and went nearly straight up to 192 to 193. What does that say? Also, with the volume shelf profile, the volume went like this, where we had a air gap right here. Okay. This right here is an air gap. It's where volume is really low at a particular price point. And when volume is low at that price point, well, stock price or stock price action, it can go up really quick and it can also drop really quick. And that's what happened right through that air gap. Price moved quickly, coming down. Now, Tesla is in a very unique situation, I think. Let me just clean the chart up here real quick. But where it's at and where we drew that yellow box yesterday, it lined up with this sideways price action right here. The sideways price action right here. So we were thinking this would be an interesting area for Tesla to find support. However, if Tesla does break this support, where's it going next? Well, looking at the chart, it doesn't look good. It really doesn't. Okay? Let me take this chart up a little higher because we really got to go that low. Surprisingly, we've got to go that low. But if we go further back in time, look at this. Tesla went on a monster run. I'll give Tesla that. I will. But this particular moment in time, this 150 all the way down to 130, I think that's a comfortable zone for Tesla to kind of hold up at, for the drop to stop, and for Tesla to potentially start building a base here between that 130, maybe as high as 150. But I think 130, just looking at past price performance, looking at how price action acted when it was at this point before. Now, I know going back to November of 2020, Elon Musk was not the owner of Twitter. And I'm sure that brings a lot of complications to the stock price and valuation of Tesla. Now, I don't think it should. It is what it is. But you got to remember, most people, when they're in the stock market, they're not taking their emotion out of it like the pros you and I are. You and I, we remove emotion and we treat it like a business, just like it should be. So we know that many market participants are going to have their feelings in here get upset. All right. But hey, it's just business and you got to remove those feelings. So this sideways action back here, October, November of 2020, 130 being the low, I think that's an interesting place. If we have to go lower, well, before Tesla got to this 130 platform here, it had another straight up move. Below that is $92. Do you think Tesla is going to go from, 137 to 130? Sure. That's reasonable and understandable. I think that could happen. But from 137 down to 92, that's a pretty big, oh my gosh, I can't believe it. That's a far fall. All right, let's go back over here and let's look a little bit closer at Tesla right now and the stock price, all right, and the price action. It's just been moving straight down. Just like it did when it was going up, it almost went straight up. I mean, you can see it left, right side on the chart here, and you can see when we were going up through this price, we went straight up. As we are coming down through this price, we're practically going straight down. This is why technical analysis is just, to me, amazing, because it works. So, like I said in our Discord, Did I post it in the Discord? I can't remember now, but I'll say it now. I think Tesla will bounce in this yellow box. 130 is the low right here, okay? And that might be a little low. But looking at that shop box back in October, just above my head here, back in October and November of 2020, that chop box, I think, is going to become the December 2022, January 2023 chop box. That's my thought. I think it's going to get held up here, and it's going to bounce around a little bit in here. And who knows? Maybe the headline of Elon Musk getting a new CEO at Twitter will send Tesla stock ripping back higher. It's a potential, right? And then we've got earnings. What are they? About a month away. So we don't have to worry about that yet. We'll probably have year-end deliveries be the next kind of headline for Tesla, I would imagine. Okay. All right. Let me zoom in here just a little bit closer on the right now. Okay. And you can see this with the price action. Also, look at this volume. Look at this volume. Let me take this up. Okay. We've got the price action. It has fallen into our buy box, pretty much, our potential buy box here for a Tesla bounce. And look at the volume. Let me point this out. Average volume has been running like this. This is the average. And of course, the average ticks up when volume is higher. So right here, look at this volume. This is like the top right here. Average was the first blue highlighter line. The max for today and going back to Tuesday a week ago. Interesting that it's Tuesday has been Tesla's biggest volume days. But today, hold on, I got to move the sugar. I didn't mean to do that. I need to move the candles out of the way. I need to see the volume numbers. There they are. Okay, so the average volume right now for Tesla is 106 million. Today, Tesla had 159 million. So about 50 or so plus million trades taking place today above average. Above average. And that's happened now for the past week. The past week has been above average volume as Tesla comes down. All right. Now, I don't want to make any wild calls here, but a bounce between now and 130 to me seems like it's doable. It's a possibility. It is a possibility. But Tesla dropping past this, if it does go below 130, then watch out for sub 100. Okay? If Tesla goes below 130, watch out for below 100. I know it seems like an extremely big drop, but that's what could happen. As a matter of fact, let me see what that percentage might be. Okay. Let me go with today's closing price. And I'm just going to take it down to $100. All right. There's 101. There's $100.85. That is a 27% drop. You think that could happen? Well, Tesla did drop 8% today. So is it that far out of the realm of possibility? I don't think so. That's why I think 130 will probably end up being defended by the bulls or those who want to see Tesla bounce and move higher. Okay. So watch it. If it breaks 130, watch out for sub 100. that'll be my final point there for Tesla. If it breaks 130, watch for a break of 100. That would be something else. Okay, let's keep moving on here. I saw some comments here. I do want to get your comments, absolutely, because they are important to me for sure. Let me back up here. We got Tesla. We talked about the video from Discord. Housing market. I do have some extra comments about the housing market. 100%. Yep. Good. Bullish retracement tomorrow. That is a possibility. That's why I'm watching that 130 area. You know, we're $7.08 off of it. And if I remember correctly, in the after hours, I think Tesla was a little green. We can't get after hours data now because it's past time. So that data is out for right now. We're gonna have to wait till tomorrow morning, early tomorrow morning, before we can get that updated data for where the stock is at right now. But I do think it was a little green. That's why 130, very important for me. Exactly. I'm sure these comments are coming from what I was just talking about for Tesla. Less volume, though. Less volume. That is true. If we go back to November and October, well, I mean, if we look right here, we got to go back. There's our, yeah. Oh, man. Wow, did Tesla have some much bigger volume back there. So what did I say? The average volume for Tesla right now is 106 million. If we look at that chop box area from September to November of 2020, that blue box right there, right above my head, average volume was 273 million. 273 million in 2020 of November was average volume. 106 million is the average today. That is a lot. That is a lot. And it got all the way up. What was that? 280 million going to the 9th of September 2020. So volume going up was much higher than today's volume of going down. What does that tell you? I think that tells you that there's either less people trading Tesla or there's more people holding. I don't know. I think it's got to mean that there's just less people trading in the market. More people have taken a step back from the market and said, whoa, I'm not touching this thing until this is over with. I can't handle being down 20% in this bear market. So, yeah, far less volume today. Thanks for pointing that out. Great show tonight. Awesome. I greatly appreciate it. Tesla bounce. Yeah, 130 is what I'm watching. We're getting real close to that. Your money's on Apple. Cool. I can pull up Apple too. We can look at that if you would want to. How the mighty have fallen. Absolutely. Remember when Tesla was 1,000? Yeah, but yeah, also have to remember stock splits. The last stock split that took place was what was this? Back here in August. A 3-for-1 split in August. So if I just go straight, I got to pull this chart down. Was it at 1,000 in August? It could have been. I don't think so though. Let's see. If we look at this stock split right here, August 25th. Now, of course, this is all stock split adjusted, but on August, what was that again? My apologies. 25th. there's August 25th. Tesla closed at $296. So if we just times that, is just rounded up to 300, times it by 3, that's 900. So yeah, before that stock split, Tesla was trading $900 a share. Just a few days before that, Tesla was $305 a share. No, that's lower. But we go to this peak. We've got to pull this down even higher. This was 362. That puts Tesla over $1,000. Wow. Wow, wow, wow. But yeah, Tesla has fallen for sure. You know, if you line up Bitcoin to Tesla's chart right here, let me do this. I got to pull it together. Ignore my marks there on the screen. But there's some similarities to the way Tesla moved its price action here to Bitcoin's price action over the same period. That Wyckoff model there. Okay, let's see here. What was the new sub? Oh, I thank you so very much. I greatly appreciate that. The ultimate high. We're here every night. The market is open to talk about what happened, why it happened, and what to expect going forward, and answer your questions. That is the most important thing about this live stream, is your questions. What about MULN? Let's see. MULN. Micron. No. Mullen Automotive. Woo! That one is falling hard from that peak just back November a year ago. Man, it's really fallen. Okay, so when we're looking at this, I'm sure, is this a internet software? All right, let me see what they do right quick. Because the car market, it's going to get upset. Southern California electric vehicle company that operates in various verticals of business focused within the automotive industry. The automotive industry is going through a transition. It is. I love my muscle car, Camaro. Boom! I love running through those gears. I can't do that anymore. I'm in a wheelchair. But my goodness, when I was younger and I had a 4th gen Camaro, man, I would just run through those gears. I loved the sound, the feel, the smell, the whole. Oh my goodness, I absolutely loved it. I raced that car. That was fun. That was real fun. Yeah, we're in a transition. It's going to take a while for electric vehicles other than Tesla to really make a major impact, right? I mean, this stock is down at 20, what, since 22, 23 rounded up, 23 cents a share. This is something that's going to take a while to really do much, okay? Being down 16% today, that means this thing is a wild mover. And I'm sure this name with these big moves, what was it? We got 16% loss today, 10% loss yesterday, 3.4%. Oh, what a small one compared to the past two. 3.8% drop the day before, a 23% rally. I mean, come on. This is not trading because of the company. There is no way. Being up 23%, being down 16% a few days later, this thing is not trading because of the fundamentals of the company. This thing is trading because it got put on, a message board. I'm not going to say Wall Street Bets is in on it, but this is definitely telling me that something crazy has. What is that? 57% in a day? Goodness gracious. And then up 3%, and then up 7%, then up 32%, and then down 1.6%, then up 6. Man, this thing is just crazy. Yeah, I can't say anything on this because stocks that move this way, that shoot up really quick, they fall just as fast as they go up. So a company like this, technical analysis, fundamental analysis, it doesn't really work. Not on something like this. So that's what I'll say. Because it's moving on emotion, it's not moving on fundamentals. And when it's moving on emotion, that big, those big of a swings, it's hard to say what's going to happen next because technical analysis just, it fails. It can't capture that emotion. If it did, that would be amazing if there was an indicator that captured emotion, or at least gave you a heads up. Hey, this stock has got something happening, right? You know, a little notification over here on the side. TradingView. If you're watching TradingView, do this. Put a little indicator over here. You've got the how many days until the next earnings. Put a little indicator right here. I don't know, 0 to 100, and track the mentions online. Track the mentions online. If the stock is being mentioned, you know, I don't know, put a big number on it, a little number, it doesn't care, and then attach it to some sort of a ruler that moves between 0 and 100. Like 0, there's like no mentions, 1 or 2 across the internet. If it's like a score of 100, man, it's on fire. There's like 2,000 mentions of it per hour, you know, like a trending, like Twitter does. Can we get a ticker trender across social media platforms and put it right here on the chart? I think that would be a cool feature. Let's do it, TradingView. Let's do it. That would be a good one. That would be a real good one. Leap's so expensive, but these fire sale prices are great. Yes, they are. Absolutely. Absolutely. I'm def buying if it goes to 130 and down. I think it's a good move. But if it breaks 130, watch out. It could go a little bit lower. Checking in Tilray. Okay. TLRY. Whoa, look at that drop. I think this company is it's very speculative, okay? There's no telling where this thing is going to go. If we just go back and look at this chart, I mean, look at that. Of course, the thing ran up during the pandemic. You had a whole bunch of retail traders in the market. Those retail traders are now gone, okay? They're gone. I mean, look at how this thing has moved. So in my book, Tilray right now, to me, is not a retail friendly investable company at this moment in time. We have a recession coming, and that recession is going to hurt a ton of small companies, especially your smaller companies in the market, okay? Like Tilray, for example. I'm sure during a recession, you know, alcohol goes up during a recession. I don't know if weed goes up during a recession or not. I've never researched that or tracked it. But hey, I guess anything's possible. But right now, I just don't think it's an investable company. If you just look real quick at the earnings down there, I mean, they're not doing, they're not hitting expectations. they were growing. At least net income, was going up slightly, but it dropped, and now it's negative. So I just don't think that it's investable at this particular moment in time. Okay, that would be my call. The risk is way too high at this particular moment in time. AMC is super cheap. Yeah, I bet it is. It's been a moment since I looked. There are so many options in the entertainment industry right now to go find. I mean, look at, oh my gosh. This chart is scary looking. It is absolutely terrifying to look at. Look at how this thing has just moved around rapidly, right? That right there, that movement to the left of the screen where it, straight up like that, that's not moving on fundamentals or anything. We know that. We know what happened to the AMC story. But as we look at the fundamentals here, are people really going back to the theaters like they were pre-pandemic? See, that's what we got to judge AMC on. Any movie chain that's out there, public company, we need to judge them based on 2019, pre-pandemic, to get a sense for how they're doing. I mean, 52-week range, 474 to 2109. It's missed some earnings here. I mean, there's man, it's bounced around. Its net income is going in the wrong direction. Net income is going in the wrong direction. And that's quarterly. Okay. If I look at it annually here, yeah, it dropped big in 2020. It's improved in 2021. But looking at it on a quarterly basis, 2022, yeah, this net income, I mean, it's still a negative figure. Most recently, negative 226.9 million. Profit margin, negative 23.4%. This is not an investable company at this stage of the game. And recessions are not good for companies like AMC. So just like Tilray, just like, Mullen Automotive, right now, they're not investable companies. DXY, that's the Dixie, good old greenback, going up. It probably is here in the after hours, which means watch out for equities tomorrow. They could be going down. But there is a falling wedge type pattern here for the dollar. We talked about the dollar already, and I greatly appreciate all your questions. So keep them coming. Whatever you want to ask, go ahead. It did a false little breakout of this falling wedge before pulling back down into it. So it would not surprise me if it did go up overnight. However, can it break out again tomorrow like it did 1, 2, 3 sessions ago on Friday? Friday it broke out. But today it pulled back. And it pulling back today allowed many mega cap stocks, even though they were pretty volatile all day, they played an influential role in driving price action for the 3 main indices. Just talking about the Vanguard Growth, Mega Cap Growth ETF, ticker symbol MGK, it was flat today. versus the S&P 500, which was up 0.1%. I know, not a huge difference, but a difference nonetheless. Now, it was the small and mid-cap stocks that performed much better than their larger peers today. Just looking at the IWM and the MDY. And I can look at those in just a moment. Let's see here. Lots of good, yeah, absolutely. Lots of good stocks for sale right now. But here's the thing. They're going to go lower. Yes, stocks may catch a bid and may start to float up as we end and close out 2022. That is a possibility, a pretty good possibility. As a matter of fact, I think it is likely that we slowly kind of float up as we end and close out this year. However, we have a recession in front of us. And a lot of these companies are going to suffer. They're going to suffer. If you are not a company that has A, revenue, 2, good cash flow, 3, your books are solid, your financial house is healthy, you're going to suffer. You're going to suffer in this recession. Okay? So I think 2023, we're going to see a drop like we saw in 2022. And I think we may end up breaking the low of 2022 in 2023. And that low occurred on October the 13th, 2022. So that's the low that we have to undercut. And I think we will do it maybe second quarter of 2023. Maybe the end of the first quarter 2023. That could be a probability of when we break the 2022 low, because the recession is going to create a pressure on earnings, and then we're going to have an earnings recession, which is never good. And then if the Fed pivots in late 2023, that's not good for the stock market either. Typically, when the Fed pivots, that's when the stock market drops, because the Fed knows that, well, this economic data is showing the market is slowing and it's really, really bad. Now, one thing I would point out, though, is during past times when the Fed has pivot, it is a little bit different than it is today. You know, inflation wasn't a big target back in the great financial crisis. So the Fed wasn't fighting inflation like it is today. At least my headache's gone. Well, I'm glad your headache's gone. Bitcoin has been bottomed now. Yeah, I think for Bitcoin, let me pull it up here right quick. Enjoying the show and dinner. I like that. I like that. Okay, so if we look at Bitcoin, there's a box that I've had for Bitcoin. I had it for a while, and it was 15,500 up to 20,500, and I thought that would be a good base for Bitcoin to build on. Okay. As a matter of fact, I'm going to do this right quick. I'm going to go ahead and take that box, and I'm going to go down to, well, it doesn't matter. I'm just going to throw it up here right quick, and then I can go edit the numbers here. I want it at 20,000. I'm sorry, 20,500. And then 15,500. That's where I think That's the base for Bitcoin, I think. Okay. That's where I think Bitcoin could just continue moving sideways, where those who believe in the technology can stack their coins, can stack their Bitcoin. And then when we finally have the technology, and this is what most consumers don't understand, a lot of the fiat money exchange that happens in the world, it goes through banks right now, but in the future, it'll go through the Bitcoin Lightning Network. Why? Because it's fast. Speed of light, going from point A to point B. You take your dollar, you get your yen on the other end, almost instantly. So most consumers won't even know that their money just went on the Bitcoin network. I mean, you can go deep on this conversation. I mean, real deep. There are so many layers that you can peel back on Bitcoin. It is incredible. Now, I do have to add, I don't think that the altcoins are investable. Bitcoin is investable. Ethereum, maybe. You know, it's on my maybe list. I do own some Bitcoin. I do own some Ethereum. So I'll let those actions speak for what I believe in. And Bitcoin, 100%. Ethereum, maybe 10% of where I'm at, what I think, what I like, what I've studied, what I've researched, what I've peeled those onion layers back on. Sure, there are some interesting altcoin projects, but I don't believe that they're investable in this current market cycle or where we're at in the market cycle. All right. Enjoying the show and dinner. Again, I love that. Amazing lesson. It's a lesson for me too. I learn with your questions as well. Good tech, loving your feedback. Your feedback is wonderful too, my friend. Absolutely love it. Thoughts on opinions versus futures? Options. Why did I say opinions? Thoughts on options versus futures? Well, to be honest, I can't answer that question. I haven't gotten into the business of futures, right? I haven't traded futures. So what I mainly stick to are options and the inverse ETFs. Like, for example, one play that I'm making right now is I've been building a position in T. Oh, got to get my cursor over here. TQQQ. All right. This is a 3 times leveraged ETN. When the Qs go up by 1%, then this will move up by 3%. So this is what I trade a lot of times. And of course, the inverse of that, right, is the SQQQ. Those are a couple of the things that I trade. Now, if the QQQ goes down 1%, then this goes up 1%. This is an inverse, an ETN, some may call, or an ETF, because it's traded just like an ETF. I do that a lot for the S&P 500. on the SPX, not the SPY, because there's more volume, there's more money going through SPX than there is SPY. So that's why I like to use that and its data a little bit better. And there's also some benefits and between the two, but I do like SPX a little bit better. So sorry I couldn't elaborate more on futures. I'm not the person to talk about when it comes to futures. Just want to be honest about that. Oh, we finally got some of that fake chat in here. Want to leave that. Just trade. Let's see. Just trade them. They all follow Bitcoin anyways. Yeah, you can totally trade the altcoins, Ethereum. You can even trade Bitcoin if you want to, but I would prefer to hold my Bitcoin. I want to buy it when it's low. It gets down to 15. That's fine with me. I'd rather buy it at 15 than at 60 for sure. But you can trade the altcoins. You can trade Ethereum, Bitcoin. They go through their cycles just like equities do. So you can definitely do it. Let's see here. Never understood credit spread. Yeah, it is it is different from just going and selling your put or your call there. One thing to point out is there are a bunch of strategies you can use when playing options. The first step on learning any of those strategies is by not using your money. Don't use your money. Make your trades using any type of paper money, okay? You can even do paper money trades here. Where is it? Here we go. In TradingView. Let's see here. There we go. Here it is. You can even go right here in TradingView and this second box right here, paper trading. Give that a try to test out your strategies. There's a strategy tester right here in TradingView. So there's a lot that you can do here in TradingView. And this is the first step. Whenever you're trying to learn a new strategy, don't use your money, okay? Use paper money. That way, if you make a mistake, it's not hurting you per se, but you're still learning the lesson of it, all right? You may not be learning the lesson as much as you will by losing your own money, because when you lose your own money, you really learn that lesson. You really understand that lesson. But you won't have that emotional attachment when you make a loss when you're paper trading. So start there. Start with paper trading. Learn the strategy in and out, what you want to do, and that'll be a whole lot easier, and you won't risk your money. Because right now in this market, like, one of the number one things to do is to protect your capital. Preserve your capital at all costs. And if you're trading in this market, then just make sure you're being smart, you're being tactical. Small position sizes. Don't go in there and start with a full position size. Go in at a third of it at a time. That way, if you make a bad call, you're not risking it all until you know that the trend is in your favor, that your strategy is working. Another thing that you could do, in keeping with this small position size, make sure you've got it. We're in a sideways market. Make sure you're going and you're trading. When we go up and we're rallying and we're getting close to that resistance line that has cut us down all year, then make sure you're taking profit off the table. And then once the trend flips, close it out. Start going the other way. When we get close to that resistance, start building your short position at that time. Don't go in 100% on that short position. Start a third of your position size and then go from there. Okay? All right. Awesome. Thumbs up. That's great. We got that. I can't believe all the comments today. That has just been absolutely a blessing. Thank you guys so very much for all of those questions, comments. I love it. I'm going to remember that, having a good time while eating dinner too. That was funny. That was really funny. Okay, I did want to wrap this up real quick. I got one more thing on my notes here. Ticker XH. Oh, get my cursor over here. Ticker XHB. This is the home builders ETF. And the reason I'm bringing this one up is because of the data that came out today and the data that's coming out tomorrow. It's all related to the housing industry. And just looking at this company, this ETF, I'm going to get all of 2022 on here. We're almost there. There's February. All right, there's 2022. So housing started off strong, fell. We caught the summer rally, fell. Caught the winter rally, fell. Okay. All right. So here's where we're at, just to get us all on the same page. Let me open this up a little bit. Yep, there's a little hammering going on. That's okay. Everybody's working. Okay, here we are. Now, the XHB, the home builder ETF, I'm bringing this one up here because today's only main point of economic data was housing starts and building permits, okay? Total housing starts declined 0.5% month over month to a seasonally adjusted annual rate of 1.427 million units. The expectation was 1.395 million. Yet single units started falling by 4.1% to 828,000. We need homes in America, and that's not a good sign. Total building permits declined 11.2% month over month, like I mentioned at the very beginning of the live stream. 11.2% month over month. That's a seasonally adjusted annual rate of 1.342 million. The expectation was 1.48 million, with permits for single unit dwellings dropping by 7.1%. The key takeaway has got to be the weakness in building permits, which is a leading indicator. There wasn't growth in any region of the country for single unit homes. None. This speaks to the waning confidence among home builders who recognize that the affordability constraints for prospective buyers due to building cost inflation and much higher mortgage rates, that's the end of it. The housing bubble is deflating. How quickly it deflates, that depends on the 2023 recession. Okay, looking ahead to tomorrow, I know some have wanted this, so we can wrap this up. I will look at your ticker there. Home prices are doubled. Yeah, one thing that is way different from the financial crisis, great financial crisis, 2007, 2008, is the fact that there is liquidity in homes. Homeowners today have money in their home that back in the great financial crisis of 2007, 2008, when all those crappy loans were given out, people were underwater on their mortgage back then. Today, home prices would have to drop 40 to 45% for people to become underwater with their mortgage. So that's not a problem this time around, which leads me to believe it's not the housing market that's going to crash this economy. The housing market will be a side effect, will be or will have. The recession is not going to be because of the housing market. The housing market will pay a price because of the recession, but it's not going to be a huge price like in 08, 07. It's going to be nothing like that. So I just want to clarify that one point there, just to make sure that all of us are on the same page. Okay, let's go over here, and then we'll get this. Oh, let me tomorrow real quick, and then I'm going to hop on this ticker. Okay. And get the solar company up. Wednesday, market participants have some economic data. We get the weekly MBA mortgage application index, which hasn't been looking good itself. Then at 10 o'clock a.m. Eastern time, we get the December consumer confidence. The expectation is 101. The prior reading was 100.2. So the expectation is that consumer confidence will rise due to the CPI report coming down. But to me, that's not making a lot of sense, because the prices that we pay when we go to the store continue to rise. Food prices, they're not really coming down. And that's where we really spend a lot of money. Also, at 10 o'clock tomorrow morning, we get the November existing home sales. The expectation is 4.2 million. The prior reading was 4.43 million. So add that to ticker XHB to see how that does as well. All right, let's look at SunPower here. I like SunPower's, I like their business. I do. But I think for the masses to grab onto solar, I think the technology needs to get a little better, number one. And the second thing, for solar companies to really take off, is people need to be able to see the benefits, okay? And with the benefits, those two things, the technology improves, the technology gets better. We can capture that sun power. Good name, by the way. We can capture that sun power and turn it into electricity for our homes. But we need to capture more and transition that sunlight into power with higher efficiencies than current technology allows. See, a lot of that energy that's captured by the sun disappears, and it doesn't get put into the electricity that the homeowner uses. That's a big, big barrier for the masses to adopt solar panels. And then seeing the technology and how it works, seeing the benefits that having solar on your home, how does that benefit you? Does that lower your electricity bill? What are the benefits? The masses don't know. The masses don't know what the benefits are. And another thing about the technology too, if you don't have a home that's facing the right direction to capture the sunlight in the first place, no matter what the, you know, efficiency of that solar panel is, solar's got to be better. And that's going to come down to companies like SunPower. They've got to get that technology moving in the right direction. And they are. It is moving in the right direction. But I just don't think, as we're going into a recession, consumers aren't going to spend more of their hard-earned money on solar, because they need to save every penny they have. So until we get through the recession, I don't see how solar companies can continue to impress investors. Just my thought. Now, once we get through the recession, once we get through the downturn in the economy, and once we start getting the technology better on solar and being able to capture and use more of what we capture, and once the consumer knows the benefits and how this can help the consumer, then the masses may start to come around to solar. But until that happens, it's not going to be a masses type of company. Now, does that mean a solar company can't make some money? No, it doesn't mean that at all. But I do think the incoming slowdown in the economy is going to be a big deal for companies like SunPower. And then if you want to do this, right, you want to just throw a box on here just like this, okay? Where has SunPower gone since June of 2021? And when I say that, I mean the stock price. Look at the big picture. Since June of 2021, SunPower has been range bound. Now, it doesn't mean you can't trade the swings. Of course you can. But investing in the company, I guess this is better than the alternative of like Tesla and the stock diving. What is it, like 70 some percent? So this one for me, I don't think it is the right time. We need to get through this recession first. And then, you know, you see this 2020 big run up, all the retail investors all excited about solar, and then boom, it just comes right back down and it's moved sideways. And if we look here, right hand side of your panel, this is actually a good thing that profit has jumped in the last quarter. That's a good thing. But you look here, down 6% year to date, and then 14.4% in the last week, 25% in the past 3 months. It's weird that it says 6 months it's up nearly 20%, but you know, you go back 6 months, it's probably at the bottom of this trading rectangle that it's in. So looks like we got a bottom of about, what's that, 14 something a share, $14 even. And then really the max here in the most recent high was about 28.3. So I think this just heads lower. Yeah, we may be able to drift up a little bit as we close out the year of 2022. But 2023 is going to be a tough year for the economy. And I just don't think solar is investable right now. Let's get through the recession. Okay, let's get through the economic downturn, and then we can start talking about solar and what are the best companies to invest in. Now, it doesn't hurt to start doing your homework now and finding what are the best solar companies out there. I like Enphase a lot. I like that company. All right. Okay, well, I'm going to go ahead and wrap up this live stream here. Thank you, ladies and gentlemen, for joining me today. I greatly appreciate it. I love all the questions we got tonight. It was amazing. If you could just hit that like button for me, share this video with a friend, and join me again tomorrow. We're here every day the market is open to talk about what happened, why it happened, and what to expect going forward. I do think we are in a position here where the markets could be on the verge of turning around just a little bit from a perspective of being oversold in the short term. Plus, we are awfully close to the end of 2022. We might as well close it out with a mini rally, at least one that slowly drifts higher. Okay. I think we just have a couple more comments. I want to make sure I get all your comments up on the screen. It's only fair. Good night. See y'all. All right. Awesome. And okay. That's it. Thank you very much. I greatly appreciate you. And again, I'll be back here tomorrow after the market closes to talk about what happened, why it happened, and what to expect going forward. Click that like button, share this video with a friend, and if you're new, click that subscribe button, and I'll see you guys in the next video tomorrow evening. Have a good night.